Gold prices have been beaten down significantly over the past year, 2 years, and everybody's saying, why is gold still down? Is gold truly that hedge against inflation? Because inflation prices are sitting here and gold is sitting here. Now, if you look at gold prices and what they've actually done over the past year in correlation to cryptocurrencies, in correlation to stocks, you have stocks down upwards of 20% as a whole. You have cryptocurrencies down even more. And gold is down about 4%. So yes, gold is still getting abused right now, but what exactly is going on? I've gotten the question a lot and I've wondered a lot myself. What exactly is keeping gold prices down right now? Now, when you correlate this to the dollar, because these two are inversely correlated, when the dollar is high, gold is going to be down. When the dollar is down, gold is going to be high. And currently, we're sitting in a situation where the dollar, UUP is what I like to look at over here, is at very, very high levels, and it's just been climbing and climbing and climbing. It's no surprise that that's happening when you correlate it with what's happening with inflation. I'm going to go with gold. This is just Barrick gold. And you see over that period of time, dollar's up here, gold is way down here. Now, what is the deal behind this? When we look at what central banks are doing, because this is kind of the universal currency that can be used, that everybody is looking to use. I'm going to read some stats to you. Central banks in Poland have bought 100 tons of gold in 2022. Singapore has bought 26 tons of gold in 2022. Hungary, they have increased their percentage of gold holdings by 3,000%. They're sitting at 94.5 tons of gold acquired in 2022. India, Russia, China, Ireland, France has repatriated money for gold. Zimbabwe, they're offering gold coins to people to tame inflation. So why am I telling you this? Look at what these central banks are saying to you. They're putting you over here. And they're saying, let's look at something, crypto. They're looking at crypto and saying, look, we're going to make this the new currency. This is going to be the great new currency. And all of them are trying to work together to centralize this digital currency, which does make sense. But at the same time, look what they're doing with gold. They are acquiring gold. So I think we need to look at what central banks are doing rather than what they're saying. So like I said, gold is this global currency. When push comes to shove, people are going to revert back to gold. And you're seeing it from these central banks. And I think the reason that I'm telling you all these numbers from the central banks, I just want to show that this is still the place to go when there's fear out there. When everything was happening over in Venezuela, when their inflation was going off the charts and people were literally starving, Russia came in to help them. And the Venezuelans said, hey, we have this fine art that we can give you. We have this that we can give you. And what did Russia say? They said, no, we want your gold. We know you have you have plenty of gold. We want some of that gold. So when we look at those prices and look what's happening right now. Let's look at the gold chart. When we were going into the recession, the last big recession, I'm not counting COVID here, in 2008, you saw gold prices run rampant when there was a lot of fear. And then the fear hit, and then we got into the recession in 2008, and look what happened to your gold prices. They absolutely plummeted before going all the way back to these all-time highs and actually eclipsing all-time highs just in 2011, 2012. And when you correlate that to the dollar, let's go to UUP, you had the same movement. This is exactly what we're looking at. Remember, when gold did its thing in 2008, it went to those sky-high numbers, and they would have been around here. What did the dollar do? The dollar fell immensely. Then it skyrocketed when gold decided to trickle back down before doing its thing. Gold was up here back in 2012, early 2012, late 2011. So when we look at these different banks that are talking about gold, because banks do play a very large role in this, Goldman Sachs has still been predicting that gold is going to get back up to $2,500. That's a 40% increase from right now. You have companies like Bank of America that's saying it's going to get to $3,000. Now, I think $3,000 is a little bit rich, but the fact that you have these institutional banks that with all of this talk around cryptocurrency replacing gold and all of this beatdown of gold in the past couple of months, actually years, maybe a little bit over a year, 18 months, that is exactly a very interesting correlation that these banks are still saying gold is still going to be this number one treasure on the hill. These bankers know, and these institutions know, that the dollar is not sustainable. Unfortunately, we've gotten to a level where we have so much inflation, and all of you know this that are watching this. We've had the Fed funds rate. They're just increasing rates. They've increased rates this year alone 3%. They've increased this year alone 300 basis points. And because of that, you're seeing the strength in the dollar. Now, we have demand issues. We have supply issues. We definitely don't have demand issues. I said that incorrectly. So if demand decides to slow, because inflation just keeps going higher and higher. Just because they're doing this could hurt demand. It absolutely could. But it doesn't seem like that's slowing, because the video that I did prior, I was talking about how people are taking out so much debt and they just keep spending and spending on credit cards. Debt is eventually going to grab everybody. It's going to be an issue. If you look at what Jeremy Gunlock said earlier yesterday, he said, what took down the Roman Empire? It was just this insurmountable inflation and debt. These are the things that we need to look for, and why gold could still be that great hedge, because inflation is so high and so running away right now. One more thing that people ask me about all the time, and this is a very real story. This is from Reuters. The manipulation of gold. Now, I'm not saying that there's this back room, all this kind of weird conspiracy stuff going on, but this is straight from Reuters, and it was a big problem that JP Morgan ran into. Now, if gold prices start to go up, what does that mean? It means that there's fear. If people start seeing gold go on the rise, that means that there is fear. And as soon as the fear starts getting out there, people are going to be exiting stocks, and that's the problem. And JP Morgan recognized that in 2020, and what they were fined $920 million for what they call spoofing the market. So if they have a position in gold, what they're going to do, and let me pull up this little whiteboard here. JP Morgan has a large gold position. Okay, they're in gold. They have physical gold. Whatever you want, whatever gold they're in, they have it. What they're going to do is place an order. They're going to open an order to buy, open buy order of tons and tons and tons of shares of gold, with every intent to cancel that order. And the reason is, this is going to show that there is open interest, and it is going to get other people like you and me, the average investor, that are going to say, hey, there's a lot of money going into gold right here. I'm going to go and buy. And you start buying those shares. You start buying, and you actually get the orders executed, and they had no intention of doing it. So their order, they go and cancel their order, but you're the one that goes in and buys those shares of gold. And this is called spoofing. And that's exactly what they got in trouble for. And this is the type of manipulation that was going on in there. And luckily, the SEC is really cracking down on them and did put nearly $1 billion fine on JP Morgan. So what does this all mean? It all means this: gold is still going to be your ultimate hedge against chaos, inflation, whatever bad happens in the world. Is it going to take time to develop because it is so obtusely involved in every facet of the world? This is why gold is difficult. This is also why energy is difficult. It's not just one specific thing. You're not just looking and saying, hey, I'm going to buy gold and I have to worry about the United States of America. No, you need to worry about China, Russia, and every other little tiny country in between that is doing the same thing with gold. Here I said Zimbabwe, Hungary, Singapore, India, Ireland, all of these countries are involved with gold, and that is why it is the currency that when everything does hit the fan, that is the place that is being run to. And outside of me saying it, these central banks acquiring all of this gold, they are telling you exactly the same thing that I am. So for diversification purposes, if it fits you, if it fits your lifestyle, it fits something you want to do, go and find some gold. I hold some gold ETFs. I've been considering holding tangible physical gold. I have not yet done that. But I do like the idea of having that diversification into those spaces for when the dollar does come down and other currencies do come down, and you know what hits the fan, that is the time where gold should start to make that climb back to maybe $2,500 or $3,000, just like Bank of America says. Why are you listening to me? My name is Mo. I'm a value investor. I also like to look at all of these other things in the news and kind of go down these rabbit holes of figuring out, hey, exactly what is going on here? Why is gold still this great hedge? If you like this process, if you like this way of thinking, you need to click this video right here, go and watch it, do yourself a favor, and I'll catch you on the flippity flop.